Keltner Channels. This is a study I personally had never heard of before. A member of my website reached out to me and asked me if I had any codes built around this study. And of course, I do not, but in taking a look at it, it looks really promising, so I thought it was worth making a video on today. What we're going to do in today's video is we're going to build a strategy and an associated scanner around this study. The strategy I'm going to build is the probably obvious buy when we close below this lower band and sell when we close above this upper band. But here's the twist in today's video. We're also going to build a second continuation strategy where we buy when we close above the upper band and we don't sell until we close back below this middle band. We're going to test and compare a reversal versus a continuation strategy in using the Keltner channels. Quickly, what are Keltner channels? Pretty simply, the middle line is a moving average, and then your upper and lower bands are average true range multiples, obviously added to and subtracted from said moving average. The way ThinkorSwim has the settings of their Keltner channels study set up by default, which is what we're going to use for our strategies in today's videos, just to keep it simple. Once you get access to this code yourself, if you would like to update these parameters to test different Keltner channel setups, I'll show you how to do that throughout this video. It's very, very easy. But they have their moving average set up as a simple moving average and based off of the closing price over the last 20 bars. So essentially your middle cyan line is just the average closing price over the last 20 bars. Then your average true range multiple is 1.5. So it's taking the average true range volatility metric of whichever ticker you are looking at, multiplying that by 1.5, and then adding that value to your 20 length simple moving average for the upper band, obviously subtracting that value from the 20 length simple moving average for your lower band. Before I click off of the settings of our Keltner channel study, I want to make note of the names of the plots here. You've got AVG being our central cyan simple moving average, upper underscore band, and lower underscore band. We're going to need to reference the names of these plots to reference this data when we're building out our strategies. We're about to hop into the coding process now, but just before we do, I want to let you know that this is a live build video. I have not built these strategies at all before what you're about to see. And I like doing the videos in this way. It sort of let you all see my creative process of creating these codes. And I just want to give a quick estimate on what I think is going to happen in both the reversal strategy and the continuation strategy we're about to make, because I've been building codified trading strategies within ThinkorSwim for over 5 years now. And that is even more powerful than just the strategies themselves. It begins to teach me how the market works and how strategies work with the market. So what I expect to happen is I expect actually the continuation strategy to be better. I expect the continuation strategy to make money, but I expect the continuation strategy to have a lower win rate, probably even below 50%. It's probably going to lose most of the trades it takes. It's likely just going to make so much money because the average win is going to be so much larger than the average loss. Whereas I see the reversal trading strategy, it might still be profitable. I don't know that much, but I see the reversal trading strategy having a much higher win percentage, just a worse average win to average loss ratio. Just wanted to make that prediction before we begin working. Let's go ahead and get into it and see if I'm right. So to create a custom strategy code in ThinkorSwim, we're going to come into our studies and into our edit studies modal. This is probably a screen you are all familiar with. This is how you add studies to your chart. Did you know there was a strategies subtab? And actually, there's a lot of default. I've actually created a ton. All All these icons that you see here with the scroll without a lock are all custom ones that I have built. You can see there's a ton of them, but these ones that have the lock icon are actually provided to you by ThinkorSwim. So there's actually default strategies you can go try right now if you've never used this function, which I would imagine most ThinkorSwim users didn't even know this function existed. Anyway, once you're clicked into this strategy subtab, you need to make sure you click on this subtab before you hit create, because if you don't, then you will create a new study. We don't want to create a study. We want to create a strategy. So into the strategy subtab, into create. Now we have our template and we can get to work. Let's go ahead and give our strategy a name. I'm going to name mine DTS, DTS being the prefix for my website. I'm sure you'll hear about the website in a second in this video. DTS Keltner Channels is what I'm going to name it. By default, when you create a strategy in ThinkorSwim, you get this add order action function. We are going to make use of this later. For now, let's just give ourselves some lines above it so that we can put in all the conditions that we will reference within this add order function later. The first thing that I want to do, I want to plot the Keltner channels from within this strategy so that when you're running it, you don't have to like turn the strategy on and turn the study on. Let's just make it all encompassing. Let's have the plot of the study all within the strategy. So to do that, I'm going to go plots and let's just go, you know what, easy enough. Let's go mid and let's call it Keltner Channels. And since we are referencing a function, we need to open and close parentheses. That's how the machine knows we are referencing an existing function within ThinkorSwim. Then remember, what was the name of our middle line plot? It was AVG, so that we know we want to reference that data and we want to, of course, plot that data on our chart. We are going to utilize dot notation. I'm going to go period AVG, end every single line of code with a semicolon. Now we should have, actually, let's go out and test it. If I turn off my Keltner channels, the study by default from ThinkorSwim, and just run my strategy, we should now see just that Keltner channel middle line plotted on our chart. I believe that is working correctly. We can cross-reference with exactly where, actually, let's do it quickly just so we can double check. Let's cross-reference with the Keltner channels middle line, and it is working correctly. You can see once I run this study that there is no other cyan line because ours is overlapping it perfectly. Obviously, we now want to plot also the upper and lower bands. So let's plot a variable named upper. Let's go, typing Keltner is going to be hard throughout this video. Keltner channels, open, close parentheses, dots. Remember, what was the name of our upper and lower band plots that I asked you to remember earlier? Upper underscore band, and we can plot lower equals Keltner channels lower underscore band. Now, as I go ahead and hit apply, we should see the Keltner channels plotted on our chart just like it was from the study, but now it is within the strategy. Once again, just so we don't have to turn on the study, then turn on the strategy, it just sort of saves an extra click and 10 seconds of your life. Worth it. If while watching this video you become interested in this idea of custom coding within ThinkorSwim, then over on my website, daytradingstrategies.net, linked down in the description below this video, I have published a handful of free codes. So go check out the website and enjoy the free codes. And digest about plotting the Keltner channels within the strategy, saving you 10 seconds of time, because actually, this is going to be very useful for building out our buy and sell conditions as well. Because now when I define my buy condition and I want to set it equal to the current price being below the lower band of the Keltner channels, all I need to do is say that the close crosses below, and I can just reference now this variable. Since it has the Keltner channels dot lower band saved within it, I can simply reference lower. So it's going to also just make the code a lot cleaner and follow good coding practices along the way. So of course, obviously here we are building the reversal strategy out first. Excuse me. So maybe I should actually add that to my name too, Keltner Channels Reverse. So we want to buy when the current price, or the current candle, should I say, closes below the lower band. And I use the term here crosses below because that means that it will only attempt to buy on the first candle that closes below the Keltner channel, not like the next candle that's also below it, but only when the previous bar was above and the current bar is below. We get that crosses below. Obviously, we want to define our sell as the close crosses above the upper band. So when we get up here above, you can't see it. When we get up here above this upper band after our entrance, that is when we would like to get out of our reversal position. Now we are going to make use of that add order function that was there by default when we created our strategy. What the add order function is going to do is it's going to actually place the orders on the chart. Now, ThinkorSwim strategies won't actually place real money trades for you. So you don't have to worry about them like messing up your account, losing you a bunch of money, or accidentally taking trades, anything like that. ThinkorSwim strategies exist so that you can visualize the entry and exit conditions, and more importantly, so you can automate the data gathering process of backtesting, because the entrance and exit data is also stored and can be referenced within ThinkorSwim. And I'll show you a custom study I've built to do that once we finish building the strategy. Just quickly before we begin working on the add order function, I wanted to show you the ThinkorSwim Learning Center page for it so you can see the list of input parameters. I'm going to go through this pretty quickly when I'm building the add order function, largely because I don't want this video to be an hour long, and I've just done this so much on this channel. Returning subscribers will have seen me do this 100 times. But you've got type, condition, this is where you let the function know when it should fire, price, where do you want to buy at, trade size, that's important, and we'll talk about that when we get to it. Then just some look and feel stuff, the color of the tick, the color of the arrow, the name of the order. So add order, the first parameter being of type. I'm going to change it from buy auto to buy to open, because I'm not going to be shorting at all in this strategy, so I never need this condition to be a cover condition to exit a short. I only want to be looking for my buy condition to be opening new orders, which is why I changed my order type to buy to open. Now our condition, I am going to simply type in buy. That is the name of our variable, which within it has the condition that the bar needs to close below the lower band. The third parameter is of price. I want to buy the close of the candle in which this condition is true. Now, the fourth parameter, and notice I am separating my parameters here with a comma. The fourth parameter is trade size. What I like to do when I'm building strategies is I like to give a dollar amount that should be taken in the position. This is just really nice to do because when you load this and test this across multiple different tickers, they're all going to have very different prices, right? So you don't just want to say like buy 100 shares, because that'll be very different if you're testing NVIDIA, which costs $112 versus Chipotle, which is like multiple thousands of dollars a share, right? So what I like to do is I like to go with a dollar size amount, say 25,000 divided by close. That will buy as many shares as evenly divide into 25,000 at the price of the candle when you want to buy it. Now, I will point out one more thing in this, another thing I like to do in just good coding practice. You should really never be hard coding values within functions like this. That's bad coding practice. So what I'm going to do at the top of my code, I'm going to create a new parameter, and I'm going to use a new declaration keyword to do so, called input. I will name the parameter position size, and I will set this equal to 25,000. Now I can reference that variable here instead of hard coding the value. I will go position size divided by close, which is of course the same thing, but now since I set this up as an input, if I come into the settings cog of my strategy, it is here in my input parameters, and it could very easily be changed. If you only wanted to take $5,000 positions instead, whatever it is, you can very easily change it from the settings cog of the strategy itself. So now we just have our look and feel functions. What color do you want it to be? I'm going to go color.green, color.green. That just means my tick and my arrows will both be green. And for our text, what should the name be? Let's just go with buy. So now as I run this code, what I should see is the first time that NVIDIA ever closed below the lower Keltner channel band, there should be a buy signal, and it should be buying $25,000 worth of shares, which at the time, considering that NVIDIA was post-split, right? It wasn't actually trading this cheap at the time, but at the time, post-split was trading at 4 cents a share. We are buying 139,000 shares. Ridiculous, I know, but the splits have kind of thrown it off, but you can see it is working as expected. Once we close below this lower band, I am buying the close of this candle. I want you to notice that even though it's painted on this candle here, that's the whole reason why this tick shows up. You'll notice this tick is at the closing price of the previous candle, of the candle that actually closed below the lower band. It's just a feature of ThinkorSwim that the painting doesn't actually occur until the open of the next candle. Because of course, it doesn't actually know yet that this candle has closed below the lower band until it officially closes, right? Then once it closes, it can't paint because I don't know how to explain it, but ThinkorSwim code doesn't run until the candle is closed. So once it closes, it can't paint because the candle's already closed. So it paints on the next day, but it is still buying at the correct price. Just like to point that out whenever I can because a lot of times beginners get confused by that. Anyway, off of our more technical rant here, let's hop back into the code because of course, as you just saw, right now we're buying and then nothing else is happening because I haven't set up my sell add order function yet. So very simply, let's go add order. We're going to go order type dot sell to close. Is going to be a typing test for me. We're going to go sell as our condition, close as our price. The position size here, or the trade size, should I say, doesn't actually matter because since it's a sell to close order type, it will always sell all shares. But just to keep it readable and to keep my parameters in order, I just like to go position size divided by close there as well. Once again, doesn't actually matter, but helps the code be more readable, which, believe it or not, is actually important when coding. Not just that it works, but also that it's readable so that it's more easy to update in the future. Anyway, once again, off my technical rant, let's go ahead and back out now and let's take a look at how this strategy is trading. So we are now buying when we close below the lower band, and we are selling when we close above the upper band. Looks like we built it to work as expected. Now, what you would normally have to do here to see the performance of this strategy so that, remember, we can test this reversal strategy versus the continuation is you would need to right click on one of the orders on the chart, go into show report. This will show you every single trade that was taken, scroll all the way down, and you get some statistics, but really not like very good ones. I can see the total P&L is over $15,000. I can see the max trade is over $1,800. Those are semi-useful, but I also need to see things like win percentage and max drawdown and average win versus average loss. Those are all much actually more important statistics to a strategy and how well a strategy will translate from back testing to real money trading more than just the total P&L. So what you would normally need to do is you would normally need to export this, then plug it into Excel, then format it, then perform the calculations manually. All sort of a pain in the ass. Now, trust me, way easier than having to go through and find all these entry and exit conditions by hand and write them all down manually. The code is still way easier than that. But I've created a custom study to make it even easier. I call it my backtest data study. And of course, just like anything else you see me publish or showcase, should I say, on this YouTube channel, it is published and available over on my website, daytradingstrategies.net. But now as I run this study, you see up there in the top left, some labels populate automatically calculating the statistics, the important statistics of any strategy you are running on any chart. So once again, I can see that total P&L just over $15,000. I can see a win percentage of 67%. Remember, my prediction was that the reversal trading strategy would have a higher win percentage than the continuation trading strategy, but it would perform worse. So let's keep an eye on that as we build the next strategy too. Average win $540, average loss $673. So what normally happens in a reversal trading strategy, actually the losers are bigger than the winners, but the average win percentage is so high that it's still profitable. Also has a max drawdown of 58%, which is too high. I want to see lower than 30% for any strategy that I make. So I actually wouldn't consider this strategy to be good, at least on NVIDIA. Right now, we're just looking at one ticker. We'll look at some more and see, but first glance, this strategy is no good. The total P&L is green. Way too often, beginner back testers, should I say, see a green total P&L and go, yay, this strategy works. No, right? That's why these statistics are so important. If you make money, but at a 60% or just shy of 60% max drawdown percentage, it's not a good strategy and it's not likely to translate well from back testing to real money trading, which is the important part, right? Who gives a shit if you can make, sorry, that's the second time I've cussed in this video, I apologize. Who gives a crap if you make a back test that makes a ton of money if it doesn't actually work very well in real world trading, right? So I, once again, on NVIDIA, don't think it looks amazing. Let's click through some of the other Mag 7 though and take a look. Apple, bad, 63% win percentage, 93% max drawdown, very bad. By the way, if you don't know what max drawdown means, it means the percent difference in the peak P&L versus the trough P&L. So the highest versus the lowest. What is that drawdown? And it just can't be this high, right? It means like you have the potential to almost lose your entire portfolio when you're trading this strategy, even though like on Apple, it's made money. I mean, Apple is so dang strong. Who cares? The max drawdown is way too high. Go look at Tesla. Okay, Tesla. Oh, it's still loading. Still loading? Ah, okay. It started at like 1,000%. Max drawdown on Tesla, 31%. Actually, not that bad. I like to see sub 30, 31%, not all that bad. Let's go look at SPY, the S&P 500 ETF. Max drawdown 30. Okay, it's still loading. Still loading. I'm loading the entire max available daily chart when I load this in, by the way. Okay, on SPY, the max drawdown is 21%. So once again, not too bad. Maybe actually, well, actually, that doesn't make a lot of sense. I was going to say like maybe this strategy works a little bit better on less volatile names because you saw on NVIDIA and Apple not performing very well, but on SPY it looks to be okay. But it was also okay on Tesla, and Tesla is a very, very volatile name. So honestly, like the reversal, it's not the worst strategy in the world, right? The reversal trading strategy on the Keltner channels is not the worst. It's profitable on every stock we've looked at, but I just really don't like the average max drawdown percentage. It's not a strategy I would try to translate into real money trading. But this is a live build video, right? Remember, this is the first time, that's the first pass I'm taking at building this strategy. Maybe we can take a stab at updating some of the parameters of our Keltner channels. Remember, we're just using the default Keltner channels. Maybe we can take a stab at raising or lowering the ATR, the average true range factor, changing the simple moving average length or the moving average type. Let's take a stab at some of that stuff and see if we can make this strategy any better. Just quickly, I've loaded up the settings cog of the Keltner channel study again, just so you can see the names and values of the inputs. The one we're going to worry about is factor. This is the multiple that the study is multiplying the average true range by to build out the upper and lower bands. The length, of course, being the length both of the moving average and the average true range that's being measured. Price we'll leave at close. Average type, we could change it to exponential if we wanted to. So let's worry about those simple input parameters, plug them into our strategy, and once again, see if we can't make this strategy a little bit better. Let's go ahead and make sure we're using best coding practices when doing this as well. That means that we are going to add these values as input parameters at the top of our code, just like we had the discussion earlier why you should never hard code values into functions. That's going to carry over to adjusting the parameters of our Keltner channels as well, and you'll see why as we get into it. But let's do input F This will be for our factor. Default value is 1.5. Let's do an input of, I know there was an average type we wanted to look at. Oh, length was the other one. So let's do L for length. The default value was 20. And then there was an input for average type. I believe that is average type dot simple. Is that the correct call? That is the correct call. Okay, so now we have parameters that are named easily and have the default values for these parameters stored within them. Once again, since we created these as input values, or variables, should I say, that means that they can easily be changed from the settings cog of the study. Keep that in mind is the first reason why this is a good idea. And the next reason why this is a good idea is because now within our Keltner channel plots that we created here, I can simply go factor equals F, length equals L, and average type, which I believe was the name of that parameter. I misspelled length. Let's see if it works. Okay, average type looks to have worked. Now I can simply plug this in to every one of my Keltner channel plots so that whenever I want to change 1 or 2 or 3 of these values, I don't have to go through and do it in each of the plotted lines. I can just do it in one area and they will automatically be changed. Okay, now we can get to doing some testing. So let's actually come out of this and let's show you how you can use the input parameters to do this. So say I wanted to try with a factor of, by the way, I sort of forgot that we were trading at a position size of 5,000 instead of 25,000 when looking at these results. I sort of forgot I fudged with that in the input parameters. Just keep that in mind when looking at the total P&L. Anyway, let's say I wanted to look at a factor of 2 instead of a factor of 1.5. So what this is going to do is it's going to widen the upper and lower band. It's going to make them further away from the moving average. What I would expect to happen when doing that is, of course, I expect to see a lower number of total trades. Now, is it going to make the strategy better or worse? That I actually don't know. Let's go ahead and run it and let's take a look. Okay, hey, very nice. First off, notice that the Keltner channels did get a little wider. We're now only taking 108 trades. Our win percentage went to 81%. This is on the SPY daily chart. And our max drawdown is now only at 18%. Nice. That is a very good looking back test. Remember, this is only on one ticker, but that is a very good looking back test. Let's now hop over to NVIDIA where the max drawdown was at like 60% before. It is now only, oh, I got excited. I was like, oh, it's only at 14%, but then it loaded all the way in and it's at 72%. So once again, not great on NVIDIA, although it looks to be performing very well of late. I actually wonder on NVIDIA, like how much of that max drawdown comes from when NVIDIA was a 6-cent stock, even though it really wasn't. Let me just look at something quickly. If I just look at like the last 3 years on NVIDIA, like kind of post-split pricing when NVIDIA was actually moving, when it was considered a big stock that you would actually be trading, max drawdown is at 10%. So you can sort of think about that how you want. Maybe that's a little bit cheating, but I think it's also cheating the strategy to look back at these crappy like 4-cent, 5-cent NVIDIA stocks when you really never would have been trading it back there anyway. Anyway, let's move on. Let's go take a look now at how Apple is performing. Okay, the max drawdown on Apple has gone up to 208%. That is very bad. The max drawdown on Tesla still sits at a nice 20%. Let's go look at something like Microsoft. The max drawdown sits at 12%. Okay, so I actually think increasing the factor to 2 has made the strategy a lot better. I'm not really sure what's going on with Apple. I'm not really sure why Apple is so damn high at over 200%. Is it even going to load in now? Trying to see if like maybe that was a loading error, but no, still sits at 200%. I don't know what went on in this chart that made it way worse, but I think overall in looking at a handful of stocks, increasing the factor did make it a little bit better. Now let's come back into the settings cog and let's look at an exponential average type instead of a simple average type. I don't think that'll change a ton, but excuse me. I just said I don't think that'll change a ton, and it took the max drawdown on Apple from 200% down to just 57%. Maybe it will change a ton. On SPY, the max drawdown is 21%. I want you to notice how when I'm looking at my statistics up here in the top left corner, I'm not even talking about the total P&L at all. The max drawdown percentage is what I find, because once again, I built hundreds, if not thousands, 1,000 plus at least, strategies. And what I find is that the lower the max drawdown percentage, the better chance the strategy has of translating from back testing to live trading, which once again is obviously the important part. Who cares if you build a really, really nice back test, right? So anyway, just clicking through some of these names now. Tesla's only at negative 15%. Once again, I think changing the average type to exponential has also made the strategy better. I actually really don't mind where the strategy sits now. It seems to be pretty good. Most of the Magnificent Seven stocks I'm clicking through, if you don't notice, we're sort of running our test on the Mag 7. Those are the types of stocks that I tend to like to swing trade, so they're what I focus my back testing on. They look to be pretty good. Note, I did just mention, wow, this clip is 6 minutes long. This video might be long. Sorry. Hopefully you guys are enjoying the long video, the live process of building and testing. I love making videos in this way. Once again, you get to see my entire process of not only the build, but how I go about optimizing the strategy and utilizing my back testing as well. Anyway, I mentioned swing trading because so far we've only looked at daily charts, but strategies will automatically adjust to anything that you can chart. You've noticed as I've been flipping through all these tickers, it's not like I've had to go back into the code and change the code for every new ticker. No, ThinkorSwim is awesome in that it automatically adjusts the code to whatever is being charted. Well, that is also true for time frames. Let's come down and let's come into the 5-minute time frame, and you can begin to take a look at the performance of the strategy. Very bad on SPY. Let's click through some other names here. You've got NVIDIA also getting hammered. I will say that something you would need to do on day trading as well is you would need to write a line of code that makes it close at end of day instead of holding overnight, because I think a lot of these huge losses are coming from overnight holds in which you just wouldn't do when day trading. But I don't know. I'm not going to mess with that right now. This video is already super long. If this video gets a ton of interest, maybe I'll make another one in which we can optimize the Keltner channels for day trading. But for right now, I just sort of wanted to showcase that you can easily run strategies on any time frame to test them for swing trading or day trading. Anyway, I think we found a pretty good place for the reversal trading strategy to make it roughly as good as it can get, and you've seen the statistics across a handful of the Mag 7 stocks in doing so. Let's now take the same exact strategy, but let's build it for continuation. Don't worry, we're not gonna do a whole another 30-minute build. Actually, all we need to do, we just really need to copy what we've already made. And hey, by the way, for those of you that have watched the video in this far, thank you. You've made it through a lot of technical mumbo jumbo ranting. I just want to let you know, I will post this code for both the reversal and the strategy. I will post these share links in the description down below this video. So you'll get these codes for free. If you've had a hard time keeping up and trying to copy what I'm typing, you probably have, because I'm probably talking fast and doing a lot of this really quickly because I'm trying my best to not make this video take an hour. But anyway, this TOS share links will be available in the description below this video, and all you need to do is copy those links. Don't actually navigate to the URLs. Just copy the links, and then in setup in the top right, open shared item, paste preview, and import, and they will be available within your strategies subtab. That, by the way, is how easy it is to import any of the 150 plus codes from my website, daytradingstrategies.net, linked in the description down below. Okay, I'm sorry. Now, let me take a breath. Everybody cool? Everybody with me? We just copied down the entire strategy code from the reversal strategy we built back within our strategies subtab. Going to hit create, and we're just going to simply delete this and paste in that code. Oh, I deleted a semicolon from my copy. All we need to do now is adjust our buy and sell condition. So first off, let me go DTS Keltner Channels continuation. This is going to be our continuation test. We need to say that the close crosses above upper. That's going to be our entrance, right? Close crosses above upper. Then for our sell, I'm going to go with below, what did I name it? Mid? Yeah, named it mid. So instead of getting all the way back down below the lower band before we exit, if we get back below the middle band, we are going to exit. So let's now go ahead and run this continuation trading strategy. I haven't run it yet. I haven't yet hit apply. But just remember my prediction from before we ever even started coding. I predicted the reversal trading strategy would have a higher win percentage, a much higher win percentage than the continuation, but that the continuation trading strategy would actually be the better strategy. Let's take a look and let's see if I was correct. Immediately looks a lot better. Now, pump your brakes quick. We are looking at a continuation trading strategy on NVIDIA, which is like, no shit. I mean, NVIDIA's so strong. It's like anything you could have bought on this stock, you're going to make a lot of money. But look at the profit. And I mean, 180 grand. And remember, we have it set to, oh, now we do have it running on 25,000. Sorry. Let's make it 5,000 so that the test is the same. Okay. A little bit more realistic, but still $36,000 and only an 8% max drawdown. That's where my eyes went to first. That is lovely. Very, very nice to see. And only a 50% win percentage, which actually on a continuation trading strategy is pretty good. Typically, my continuation trading strategies have like a 35% win percentage, but they're still profitable because if you take a look here, average win $738, average loss just shy of $300. So that average win much larger than the average loss. That also is why the max drawdown percentage is so low. It's not because it's like necessarily losing less. It's just that when it wins, it's winning so big that the drawdown of the max percentage is a small number, which is what we're targeting. Next, let's go ahead and hop on over to SPY. Ooh, okay, SPY is tough. SPY has a max drawdown percentage of 82%. Coming off my high horse a little bit. I was getting a little bit excited about this strategy, but that does not look so good. Let's go take a look at Apple. Okay, all of a sudden we're back. Apple's max drawdown is only 13%. Let's go look at Tesla. Tesla only 7%. And Tesla's a nice test too, because Tesla's been real kind of choppy shitty over the last few years, right? It's not exactly just been like a rocket ship. It had its rocket ship period. Let's not act like it didn't, but it's not like it's just continued taking off like NVIDIA has. So I actually like the test on Tesla as well. And let's actually go take a look at a stock. I didn't look at this for the reversal trading strategy. Maybe I should have, but this is my favorite individual stock to look at for back testing. It's called XYZ. It used to be Square, then it was Block, and now it's XYZ. They can't make up their mind on what their ticker wants to be, but they have a plethora of market conditions within it. They were sort of like bullish but choppy, and then very bullish, and then very bearish, and then sort of choppy but bearish. So a little bit of every market condition. So I like to see how strategies perform in this. And you can see here, 20% max drawdown, which is a fine number. That would be a number I'd be happy trading with. So I do like the continuation trading strategy better, minus like what it looked like on SPY. SPY was pretty gross, but for the most part, I do like this strategy better. Remember, we are back to the default input parameters of the Keltner channels, the 1.5 factor, the simple moving average type. On the reversal trading strategy, we found that a factor of 2 and an average type of exponential looked like it worked a lot better. So let's try that as well with the continuation trading strategy. Okay, the max drawdown on SPY comes from like 80% down to just 57%. It's a lot better, still not, I would never trade this strategy on SPY. It's still not good enough to trade, but better. NVIDIA, was it like an 8% max drawdown? Like 15% now, made it a little worse. Tesla's now at 9%. Apple's now at 13%. So chilling, maybe actually the normal parameters were better, whatever. I'm not going to take like what I would do. Let me tell you next steps. What I would do is I would open an Excel sheet and I would write down the drawdown percentage statistics for this set of parameters and this set of stocks. I would write that down. Then I would create a new set of parameters. I would then, obviously, for the same set of stocks, I would then write down the max drawdown percentage for that. Create a new set of parameters for the same set of stocks, write the max drawdown percentage for that. That is like the next step to really fully optimize the strategy and find what works best to achieve your trading goals, right? And that's sort of the beauty of the strategies that I build and why I build them in a way that they can be so easily modified, because everyone is going to have different trading goals. Some of you are going to be targeting just massive P&L. Even if the max drawdown percentage is a little higher, 40, 50%, you're going to be fine with that as long as the strategy is making more money. You're willing to accept the extra risk for the extra reward. Some of you aren't going to want that. You would rather have like a 10, like no greater than 10, 15% max drawdown. Even if that means smaller reward, you are more comfortable with, a higher win percentage and a little bit safer trading. So you take the statistics provided to you once again by my custom backtest data, which is lovely. I mean, think about how much faster it is that every time you change something on the code, you can immediately see the statistical difference provided here on any stock that you type in, instead of having to go through and run the report and export it to Excel and format it and hand do the calculations. I adore, that's weird, I'll say it anyway, I adore this custom study. It is so useful. It saves you hours, hundreds of hours of time over your trading career. This study will. Anyway, I sort of like where we've landed with both these strategies. I'm not going to lie and sit here and say that I really am in love with either one of them. I think they're both sort of okay, but I think it's proof that the Keltner channels can be useful, right? Whether you want to trade purely based off of them, maybe not, maybe not. Maybe they're not that good. Maybe you should combine them with some other analysis, but sort of the whole point of building a strategy around just one study like the Keltner channels, like we're doing in today's video, is 17-minute long clip. Sorry, guys. Is so that you can get an idea of the usefulness of it, right? Once again, maybe not necessarily so you can just blindly trade this one study, but you now know the best ways you can make use of this study in combination with others. We still have scanners to build, guys. I still want to build you all scanners that show you stocks that are above the upper band on the Keltner channel and below the lower band on the Keltner channel. They're really easy to build. I promise it's not going to take that long. Let's jump into it now. All right, I promised this was going to be easy, and I promised this video was going to be less than an hour. So let's hurry up and get into it. So the purpose of the two scanners we're about to build are going to be to find strong stocks and to find weak stocks. So whether you are a continuation trader or a reversal trader, you will find usefulness in both of these scanners. So I have two stock filters turned on by default that I run on almost every single one of my scanners. Just don't show me any stocks currently trading less than $1, and don't show me any stocks that have traded less than 1 million shares of volume on the day. Feel free to set up stock filters however you would like to return to you whatever kind of stocks you like to trade. But the meat and potatoes of this of this scanner is going to be from this study filter. So go to add filter, add a study filter, and hop into the pencil icon of said filter. And let's go ahead and use the ThinkScript editor, because we've been talking about code a lot in this video. So you already have an idea of how the code works for the Keltner channels. First, we'll build our weak stocks one. So let's do close is less than, and we're going to go Keltner channels dot lower underscore band. That's it. That's all you need to do within a study filter like this. You don't have to define it within a variable. You don't have to store it in a variable, should I say. You don't have to end your line of code with a semicolon, anything like that. Simply type in the code like this and set up whichever time frame you would like to run this against as well. I'm going to leave it by default on the daily, but if you wanted to look at strong stocks on the 5-minute chart, feel free to change the time aggregation down to whatever you would like. Go ahead and run this scanner now. We should see any stock that is currently trading above its upper Keltner channel. The first stock on the list is ARDX. We're going to go ahead and load up. Oh, sorry, below its lower Keltner channel. I forgot we built the lower one first. So we are looking at ARDX, which is of course currently below its lower Keltner channel. Scan seems to be working as expected. And obviously, if you wanted to build out the strong stock scanner, which I accidentally said, you would go close is greater than Keltner channels dot upper band. Pretty simple. Not a very hard scan to build, but one that could still be very useful for objectively identifying strong and weak stocks. So for strong stocks, we've got PONY, and this, yes, indeed, is well and up above its upper Keltner channel band here. Those of you that have made it 45 minutes into this video are obviously very interested in custom coding within ThinkorSwim. So head on over to my website, daytradingstrategies.net. Once again, import the free codes that are there so you can get an idea of how easy it is to import them. Read the reviews, decide if it's something that could help accelerate your trading journey. And once you do, go ahead and click on sign up. You can either sign up for the monthly plan or the annual plan. Obviously, the annual plan is going to save you a handful of money over the monthly plan, but also, and even more importantly, you're also going to get lifetime access to a Discord server that is full of people utilizing ThinkorSwim code. So it's going to be full of a community of ThinkorSwim coders. So you can talk through your code, talk through your tests, talk through what you find works best for you. I have my service set up as a monthly subscription because I am always adding and updating new codes to the website. So as long as you remain subscribed, you will continue to get access to all the new codes I add. Once you have checked out the codes for a while, I would recommend you checking out the codes for a while first, because there is also a course that is available. But this is really meant for like people definitely ready to take their trading to the next step. The course is going to be much more expensive, but you think about it in context. How much money do you think you could make over the course of your trading career if you knew how to code your own custom study scanner strategies, alerts, conditional orders, etc., in ThinkorSwim? I'm not allowed to answer that question for you, but hopefully the answer for yourself is a lot, and that is exactly what my course does. It's going to take you from knowing literally nothing about coding. I will take you from the ground up knowing nothing about coding or ThinkorSwim in general. You don't have to know anything. You have no prior knowledge necessary, all the way down to being able to code exactly like I am in ThinkorSwim with 5 years of experience. So if you're interested in that, obviously click on course over on the website and you can check this out as well. All right, y'all, long one today. Let me know what you think about these. Do you like these long videos, these live code builds, these live sort of back testing and optimizing of strategies? Do you enjoy the long videos like this? If you do, or if you don't, let me know in the comment section down below so I know what to make moving forward. If you learned something in today's video, please hit the like button. If you would like to continue learning, make sure you subscribe to the channel. We just passed 27,000 subscribers on this YouTube channel, which is amazing. Thank you very much. And with all that being said, I'm going to go ahead and sign out of this video, and I'll catch you all in the next one.